Good weekend, all. Ira Epstein with your Stock Spider ETF market wrap-up. And this wrap-up is for the evening, as we're here now on Thursday, the 28th of December, 2023. I'm at 6:46 p.m. Central Time. Let me start off. I wish you all a Merry Christmas, Happy New Year. I thank you for tuning in during the year and watching these videos and supporting us. Many of you are subscribers to the different videos that we put out, the subscription videos that we put out, and my full research writings. These videos are free, meant to be free. And, you know, I want to make something clear. I had a gentleman write me and said, it's the first time I saw it. I'm looking for strategies. I can only talk in these videos, general strategies. I get very specific in the morning subscriber videos and in my writing. Why? Because these are to the general public, and the government says you cannot come out and say, do this, do that. Have you ever wondered why, if you watch CNBC and Bloomberg, they're not coming out and say, do this, do that, and blah, blah. Occasionally, they used to do it in option strategies, and they come out, buy this call here, write this, do that. They don't even do much of that anymore. And the reason is the government wants so much paperwork if you're coming out to do that. But you can talk just the way that I do and the way they do in the generality of what the market is and come up with that. And then in our subscriber area, where you need a user ID and a password to get into it, and the disclaimers all come up right in front, away you go. That's where I do that. So if that helps you, I hope so. If not, you're not going to get more than that, because otherwise I break the rules and I'll be in trouble with the SEC and the NFA and the CFTC, and it's not going to happen. I will not knowingly break any of those rules at any point in time. Now, do remember, as a subscriber, you can also write me. Let's assume you want to know something on a certain stock or something. I'll generally create a short video for you, personalized, just for you. Send it to you and show you the chart action as to what I see. But I only do that for my subscribers. So if that's something you want, it's there. I intend on holding a live webinar in January, so look for that. This weekend, I'll put out the weekend version of these, and I'll be covering BYD. I've made up my mind. We'll leave Nike and we'll move on to BYD, the Chinese automaker. I think their stock symbol is Buddy. And I want to cover that because they've overtaken Tesla in the amount of electronic auto sales that they are doing. They're just a monster. I've read reviews. I'm a car freak, so I really keep up with cars. I have all my life. And I've owned, I can't even begin to tell you the myriad of fabulous cars I've owned, from Ferraris, Bentleys, Rollses, race cars. I used to race for Skip Barber myself, doing that for years, not a little bit. I travel the country and do that. Had a ball doing this, and it's still in my blood. I love it. And I'm reading nothing but good things about it, which is very, nice to see. They're going to be breaking into Europe. The U.S. will put tariffs on it. They won't allow it. Anything to do with the name China on it, the U.S. keeps out of here as they fight with us. Eventually, we'll get through all that, but we're not there at this point in time. So remember what we do here. We talk about the generality of the market, what it's looking like. I'll tell you what I think the pros are doing in the market, and then I will take that and I cover 40 charts in my morning subscriber videos or more with specific buy here, sell there, and you are loaded up. You have, I think, 4 or 5 positions on right now, and you've had them since November. Long in a number of the ETFs. That's all that I can say about it. In Nike, big outside day up today. An outside day is when you take out a previous day's high and low, you close higher on the day, and ideally over the opening of that day. Now, until you take out today's low, this market now is screaming at me, at least, time to be out of shorts. So the big break in the market, wonderful, but the market, I think, is finding its footing. When I put the swing line on, which is this brown line, it looks at 5 variables. It looks at the bar in front of it. It could be a 5-minute bar chart, a 20-minute bar chart, a 1-hour chart, a 1-week chart, a 1-month chart. It'll look at it all the same way. It's either going to look to see, did you make a lower and low with the current bar? Are you making a higher high? You have an inside bar where you didn't take out the prior bar's higher and low, or an outside bar up or down. Notice I'm using the word bar because I don't know if you're looking at day charts or what you are. This is a day chart, and when I get that action, you've broken the bear trend. You now have a higher high, lower low. You're out of the downtrend. The next thing I look at is where's the market trying to find its support. It didn't quite get to the 100-day average. It came down for the first time in a long period since the beginning of the month and challenged the 200-day average, that's the gray line, and now it appears that it wants to go back and challenge that number again. Where did the support then come in? Bollinger Band. If you understand Bollinger Bands, it is an algorithm designed to keep the market trading within the bands. By its very nature, the market goes sideways and eventually has to break out of that. It's not going to stay that narrow forever, and it pushes on the band. It can step out of it, but the people that are trying to sell this that it's going to hell, how's that for the word? Going to keep going down. They generally get themselves caught because 95% of the time you'll stay within the band. So you get your bounces. It doesn't mean you can't push the band down, but you'll push it down from inside, pushing on that band, not by getting through it and just going. Occasionally during the course of a year, some market will get 4 to 7 days outside of the band pushing it. It's a rare event. It generally comes off of either a fundamental change that catches the market by surprise or the sideways action where it's all bent up and the market suddenly goes in a big trend. I teach you how to observe that, how to spot what it is, and I talk about it in my subscriber videos. In this particular case, to me, if you were my client, you'd have the rib right there, get the elbow in it and going, it is time, take some money off the table or all of it, I don't care. You got to do something. That's how I'd be talking to you. You're oversold, down to the Bollinger Band, outside day up. Now, if you take out today's low, do you crash? No. You go down to the closest number of a Bollinger Band under it or a moving average, it's right under it. So I'd be very cautious. I'm not as bearish as I was by a long shot. Then we get over to Rivian. If the red line closes under 79, I will look for prices to retreat back to wherever the 18-day average is when that occurs. We'll see if it occurs. Right now, the bulls are in control. You've made new highs for the whole move recently. You were higher earlier in the year, so don't think these are all-time highs. They are not in this stock, and it's had a nice run. But it closed near the lows. If it backs off a little, you're probably going to flirt with that red line trying to get back to the 80 level, but it needs to settle under 79 to lose the embedded reading. In the gasoline fund, I'm back to the bear camp. Lower highs, see all these arrows? I marked them on here for you. Lower lows, and you closed under the 18-day average, the red line. So until the market gets back up and over yesterday's high, and yesterday's high in the market was 63.36, I think the pros are going to be selling the market, looking with the stop there to see can it get back down to the 57.28 level. We'll see if that's how it works out. Now, I haven't looked at the weekly chart, and I always use that as another filter on it to see is that doing the same thing. On the financial services, one of the big bets that the analysts at different banks seem to be making is this will be an area that comes alive. Well, I can see it, but it's not embedded. It's an overbought market that's struggling to come up here. I'm not enamored with it. The pattern is lower low, higher high, and it's had a heck of a run all the way through November and December. At some point, consolidation is a word that makes sense. In the industrial sector, everything we see in industry is terrible. We just had the Richmond Fed numbers. They stink. The New York Empire State numbers, they stink. Yet the market keeps going higher. Why? Because the market is hell-bent on the idea that interest rates are going down and that it's not only from the U.S., it'll be from economies, from the whole G7. They will be coming down in 2024, and that'll help industry come alive. Okay. You have the embedded reading. It's certainly bullish. So until the red line closes under 79 on pullbacks in the market, I think the pros will be buying. In AMC, you know my opinion. You don't have a blockbuster movie. You don't have anything to carry this over strong. 2024, because of the Screen Actors Guild and the actors strike, the writer's strike, you're not going that far with new products. You got to take what's in the can and roll it out, and they'll do that come probably, I'm going to give you a guess, March. That's a logical time frame. So we'll see what happens. You got down to an area here where you're embedded. If the red line closes over 21, I think you'll get a pop then to the 18-day average, and I think you play around. The bias is down, and I think on rallies, the pros are selling this market, but there's not a lot of downside, 584. You do realize they had a 10-for-1 reverse split in this market. It was all the way up in the sky, and it failed. I was telling you I thought it would fail. Every time they try to issue more shares of stock or debt, the stock gets liquidated down. They need something else. They came up with a great idea with those rock concerts from Taylor Swift and Beyonce. They need to come up with more product and more innovation like that. When we look at the consumer, how many times have we heard he's dead, he's not buying, he's done, he's got no money left? That's not what the chart is saying. When and if the red line closes under 79, I think more of a correction will hit and you'll get back to the 18-day average. Now, that could all happen early on in January. You've come up so much in these markets, it won't take a lot to weaken them, and then in unison. They come down and they give us a new trading pattern to work with. But until that occurs, I contend the pros are looking at the market hard. I don't think they're buying it very much. Why? You got a 13-cent range. Come on. The move has happened. This is probably a good thing to avoid. In the home builders, well, down here, you know how bullish I was, and I am bullish. Look at how the embedded reading is. Has this called this rally? If you don't see that, are you blind? I don't know what else to say to you. It locks in and the market makes a move. When it loses the reading, the market gets corrections. It's that simple. I teach it in your charting course called Enhanced Bollinger Bands under the word education at iraepstein.com. And now I'm looking to see what happens here. It's hard to buy a 2-month rally of this size. That does not mean it's not going higher. Until the red line closes under 79, I contend the pros are buying. When that happens, they'll go back to the drawing board for a while and say, the November, December rally, market needs to breathe a little. You're not there yet. You need to get under that 79 settlement. Here, overbought. Market didn't quite make it to the upper bands. You're having some problems here all of a sudden. In the gold market, this is an area to take money off the table. And I'm the gold bull. This is the area. You're at the upper band. Say bye-bye. In SLV, now you took out the 2214. It's time to say bye-bye to long positions. Time to go neutral, from my point of view, in the metal markets right here. In the copper market, I just read a study where China is spending a lot of money on aluminum and copper. What they're building is, again, their grid. They're taking their electric grid and they're throwing a lot of money at it. This market should be well supported on breaks. What I'm looking for is, do we get a crossover where the 18-day average gets over the 200? The market has met one of its targets. When you crossed over right here, the 18 over the 100, you went up and you absolutely made new highs on the move. Now I'm starting to eye it's backing off a bit. Tomorrow's a big test day. If tomorrow's a down day again by very much, you got to take a look. If you get under 79, you don't want to be long anymore. You're probably coming into this area for support on the downside. In TLT, still bullish. I think the market will buy this market again tomorrow. Now, we're just about to get a bullish crossover. Look at how the 18 is getting ready for the 200. See that? So I think you're going to see some buying on the break. Again, as long as you're not under 79, I think the pros will buy that break. In the dollar index, you got your embedded reading. Did you look at my gold report 2 weeks ago today when it came out super bearish in that report? It was on the website for 3 days, the video report. Tell me that call wasn't right in the money. I mean, it's one of the better calls. That certainly worked nicely. And if I'm bearish the dollar, I have to be bullish the euro. Why? 40% of the dollar index is made up of the euro currency, and that carried the market right through here. Now, you're to the point where are you going to embed? So let's look together. Both numbers were over 80 today. Both were over 80 yesterday and both the day before. So the first challenge when a market embeds on the way down, as long as the market stays and you don't get that red number under 79, they'll buy. There's a moving average that they buy. It's not here. I don't show it on this chart, and it's in my subscriber video. And that's what you should make yourself a part of. You know, I do my morning futures and SPDR ETF videos. My SPDR ETF video comes out each morning at about 9:45. Why? I want to see all the U.S. economic data comes out, with most of it in the central time zone, comes out between 7:30 a.m. and 9 o'clock. As it's out, the first half hour of trading has to do with, as you know, after-hour trading in stocks and ETFs. The market then blends everything, and away you get going. Then the reports end. I'm recording. My tapes that I do, my videos are, I don't know, 15, 18 minutes long. Takes about 10, 15 minutes to render after I shoot them, and then they're posted. So 9:45 you have them, and I'm very specific to buy and sell, where to do it. How do you get them? You can move your cursor over to the top here. You'll see an icon. Takes you into the research section at iraepstein.com, or go to iraepstein.com and do that. That should be your New Year's resolution. Second one, learn Bollinger Bands. Learn how to work with them, tying momentum with the band, not the band by itself that so many of you are used to doing. There's a better way, in my opinion, to do that. I'm Ira. You have a great weekend. If I don't see you tomorrow, I will put out a morning subscriber video, but I probably tomorrow night won't do my nightly review. That it might. We'll see how I feel during the day, but I got right up through, as you can imagine, Monday to get it out because all the markets are closed for New Year's Day. You have a great New Year's. Thank you for watching. Hope you give us a thumbs up, and I hope you become a subscriber. That's where the juice of what I do is all about. You take care.